So put on the blind and put on your ring light. It might make it light.
All right, let's try again. All right, let's try again. It's working. Okay, perfect. Thank you. Let me just bring this chart down. So if you, I have a different spot tonight. So if you see me looking this way, it's because I'm looking at my desktop on the side, and the camera is here. So yeah, let's give 2 more minutes for people to join, and then obviously I'm just gonna go ahead because I will leave the live stream on the channel. I leave it for 2 weeks and then I make it private because it's just right for people who actually come and tune in, and people who actually come. There is a few people who message me to say that they won't be able to make it for tonight. So I will leave this live webinar here for them as well, and for 2 weeks, and then I will take it off. Not take it off, I will just make it private so it won't be accessible for the public. Um, I just think it's right because yeah, some people make time to be here, and I know there is unforeseen circumstances as well, but oh, yeah. All right. So good evening, everyone. Thank you for joining tonight. I know Ibrahim is here. London. I don't know who else is here, but you can feel free to put chat, comment, reply, ask me something in the chat. Um, I have it here in front of me, everything, so I will be able to see, and I will try to also answer your questions if you have any. Yeah, so I'm just gonna give it 1 more minute and then I'm gonna start with the live webinar. So basically tonight, welcome, welcome. I see more people popped up. So welcome to tonight's live. So basically this webinar will just cover the week's trades that we took this week. on gold. If you are new to my channel, go back to my older live videos, go back to the old videos. I'm not going to introduce myself again. So tonight I'm just going to basically do back testing, the strategy that we trade during the week, how I spot the trades, yeah, and just talk you through to what I see in the market, and there might be some time for me to also share what I think what's going to happen next week. Um, yeah, so I'm looking at gold, and I am now going to start with the backtesting from Monday straight, Tuesday, Wednesday, and Thursday. So I'm gonna start by going back in time. Monday was the 20th. Sorry. All right. Okay, so I'm gonna do a clean chart just because for the purposes of this backtesting. Now, if you're in my group, you know that I try to this demand and supply strategy. And there's a few things that I do. Sorry, I just want to check something. Thank you, Jalen. Okay, I just got a message in the WhatsApp. Thank you. I see there's more people joined tonight. Okay, so as I said, I'm going to start with my trades from Monday to Thursday, and I'm actually going to explain to you what I look for before I enter the market, and how do I know exactly when the trade is invalid, when a trade is going to play out, and how I set my targets, take profits. I mean, TP1, TP2. Normally, what I do in the group, I have a set TP1 and a set TP2. Now, it's based on the trader if you are holding to TP2. Now, I'm not saying that the market will always go to TP2. Obviously, I don't have control over that. But normally, price will always reach out TP1 and then it will retrace. But I will also speak about that tonight, how you can manage your trade when price, like it happened to us twice this week, actually, past week where price was going to hit our TP1 and then it would come back to the entry. Now, sometimes it will come back to the entry and then it continue with the pattern and follow the structure actually. But there was twice in this past week where the our trades or the trades I sent out actually hit TP1 and then it came back to entry and then it just changed the direction completely. Now, what do you need to react in that? You need to react when that happens. So I'm gonna show you tonight what I do when that happens and make sure and that, how I make sure that I still take some money from the market or take some money on that setup or make money on that setup even if the trade comes back to me. Now you will have to be quick. Unfortunately, you will have to be quick because with gold it is a fast market, and I this is a trend trading strategy. So we trading when the market is trending. That's why you will see I send my trades at a certain time, um, at a specific time. And when I take trades out of that time zone or that time area or that session, normally the trades will not always hit my TP1 and TP2. You would see in the past 3 weeks where I sent my trades out, the wins that we had is where when it was during those trending times in the market. Now, that is another thing that is important. You want to trade when there's a lot of trend, when the market is trending, especially the strategy that I'm trading because I'm using demand zones. I'm looking at where the demand is coming into the market or where the supply is strongly coming, the start of the supply, and that is where we want to enter. We want to enter when the moves start. So let's look at what happened on Monday. Now, Monday, you will probably think, now, what is these green horizontal lines? Now, in my mentorship, I actually take you, if you are a beginner or you've been a seasonal trader, I use something like psychological levels in my trading when I analyze. These horizontal lines it's not random lines. It's actually the numbers matter to me. Where I put the lines matters actually. It's according to structure, but there is a method that I use for these lines, and I leave these horizontal lines, but it is actually key areas. Now these key areas plays a vital role when I come to the market in the morning and I look for a entry. So you will notice I have a middle line here, and then obviously this will we will ignore this now because no, sorry, we won't ignore that. This is the 17. I thought now it's a different time. So if you're not familiar with TradingView, anyone can, this is free. You can just Google TradingView and go on Google and just click on chart and this will come up. So I have the paid version where you can actually do the bar replay, and it comes with other features where you can do certain things, but you can even have the free version. You don't need to have all of those things. So what I do is I look at it. If you look here at the bottom, you see this cursor right at the bottom of the screen. You see Monday the 20th, and then I look at the time. Now I'm gonna just forward it a little bit so that we go to 6, 7 o'clock around there. Now this is what the market was looking at like on Monday. Overall, the first thing I determine is overall direction. So we want to know whether the market is in an overall uptrend or in an overall downtrend. There's actually only two trends that the market can be in, or in a consolidation. So we know overall we are bullish, trending upwards. So Monday when we came to the market, I saw this thing happen, and I paid attention to this area here. Because this is a area where the supply came into strong into the market. Why? Because a major low was broken on the 1 hour. And that means strong bearish momentum was presenting itself in the market. So when I came to the market and I saw that, I normally look first for a break in structure. Now, it's not nice to analyze on your phone because you won't be able to see this all of this price action at the historical price action, and that is actually very important to me. If you look at this on the 15 minute, what do you see here? You see a multiple rejection on a resistance, right? This is a resistance area, meaning that price came to this area and bounced, came back, bounced, and came back to that area. So that is telling us something about what price wants to do. It's also a triple top pattern, a candlestick pattern, and we know what that indicates. It indicates that price wants to continue going down. However, there's more confirmations that I look for before I even start my analysis, right? The first thing is you will determine whether the direction will be bullish or whether the direction will be bearish. Now, if you remember on Monday, I said to you, I sent you actually a video before I was looking, like when I came to the market, and I said there is this strong pullback. Even though we are overall, if you check on the 1 hour when you zoom out like this, we are overall going up. How Monday we are starting to see that price is starting to give us strong bearish indication. However, we are in because we are in an overall bullish trend. I'm not going to want to sell all the way. If I was gonna sell, I'm not gonna sell all the way down here because price might just only be a pullback. As we know, market structure will always it will always move the market will always move according to market structure, and we know that. Look at this, in an uptrend the market has to make pullbacks in order to continue the trend. So we could be stuck in a pullback. So it's important to keep that in mind when you want to know in what direction are we actually going in a bullish, or are we actually bearish. So we must feature in the higher time frame structure with our lower time frames. Whatever we see here, we must not forget what we see on the overall time frame. Oh, sorry, overall direction. So then I told you if price break here, I remember I still send this picture in the group. If price break this police here, this candle here, then we can wait for that type of retest, and then our targets will be based on these lows here, because the idea was that price will then continue and come and grab all this liquidity here at the bottom, because as you can, if you look to your left here, this is also a previous low, and you can see price dropped all the way, tested this low here, and then it continued going up, right? So my remember my stop loss, my entry was going to be at 4 to 50. Now this is how I then look for my entries, by using a supply and demand zone. Now in this case, we could see, I'm just going to change this to a blue color so we won't get confused with this. This is a resistance there up that I was indicating, but this is now the supply zone that I was looking at, and also the area of interest. Because just check on how it looks on your 5 minute. So on your 5 minute, you will also see that this bearish candle is starting to break these lows, which is indicating to you that price is, if price starting to break lows, lower than lows, then you need to remember that that is an indication of bearish momentum in the market. So remember what I said, let's wait for that. And 4 to 50 was gonna be my entry. I was not gonna enter here because I wanted to wait for the 15-minute candle to actually give us a better close, so we can um, have a stronger confirmation, and also stop loss. Now stop loss in this case was 4 to 5 6. 5 6 is, look at how tight that stop loss was, because of structure. Now normally my stop loss would have been just above this. This is the zone, above the zone, but obviously 100 pip stop loss is not feasible for your account, obviously. So I'm also trying not to have like a 100 pip stop loss and have a 100 pip target, because that doesn't make sense, because then it's a 1:1 risk to reward ratio. So my stop loss was at 4 to 5 6. However, I said let's wait, because the reason why I sometimes wait, because it's, I know that price will sometimes go all the way into our zone here. It will play around in the zone, and once it breaks out, then it will continue. And once it breaks out of the zone, it will continue going down. So I just want to show you what happened. Now, here is, that's the reason why my entry was at 4 to 50, the entry that I gave you guys. Because if you check at this, right at the zone, here's the rejection candle that I spoke about last week, not last week, the week before in the webinar. We wait for a break, we wait for the retest, and we wait for that rejection candle. So in order for us, check on the 15-minute, this week is a rejection candle. And if you check on the 5-minute, you'll see that this pattern forming here is a evening star pattern. So that pattern, the bullish candle with the dozy, with the bearish engulfing candle, that is strong indication of, now that is a very strong momentum, and it's lower than this low. So now when you entered here, look at this green candle, it went up, and your stop loss is above here. You see this? This is where my stop loss is, according to structure, it's above this wick here. These three candles, it's above the wicks, the bodies of these three candles. Because the reason behind that is, once we see that price is closing there, and if price is going to come all the way up again into the zone, even this is a high, remember, when price starting to break highs, then it means that it's now going to make higher highs. So it will not make sense for me to not have my stop loss here. So that's why my stop loss is here, saying that if price comes higher than this high, then this trade setup is invalid. Then price is no longer going to drop. That's basically what we're saying. But also stop loss is there to protect our capital so that we will not be sitting in, because anything can happen obviously in the market. However, we trust the analysis. We entered here, price come give us a small pullback, and then this candle start moving. So just check here. If I mark off this body here, this can be your first target and that could be your second target, because we are targeting the liquidity. We are targeting the previous price action, the gaps here, that where price was moving previously to. So, and just check how price reacts, how this price reacts. Price drop all the way down and it hit that 4233 level, right? And then obviously you can take my TP was at 43. My actually my TP1 I set to 43 4230. However, if you were up here, it's 107. If you entered here, your TP 173 points on gold already. You are already up 1:2 risk to reward. If you don't take profits here, it's all up to you, you know. But this is just how I trade. So I would have maybe 3 positions open, take some money off here because now I'm already in profit. Leave to 1 or 2 runners, and then just check if price, because normally what happens at, just check what price did, because price came to this level, the previous low. Price pulled back but never came back to entry, just gave us a pullback. So now we were in a bit of a drawdown again, and then not drawdown, you're still in profits, but there's a pullback, and then price started to continue. So just check how this candle hit right here and then it started to reverse. This is how price respects every key level. So your targets are set based on these key levels. And that was on Monday. That is what I saw, and that is what I executed on. So on, let's see. Okay, everyone is still here. Um, let's go back to, and as you can see, that was a nice, if you, the full moved to 4223, and my TP in the group like was at 4223, and my TP1 was at 4230. So you would see that 280 was TP2, that was 280 pips, and TP1 was like 230, was at 200 pips on gold, and that was on that sell. And I want also to pay attention to what happened when it, now just check how it came back. When price came back from the TP2 area, it pulled back right into our supply zone again, and just notice how it started to consolidate in the supply zone. As you can see, price started to just consolidate around the supply zone before it started to break highs here, actually, and then continued going up. But that is why take profit as soon as you start seeing that price is coming for our TP1. Like I said, I never really have my TP1s less than 100 pips, and that is a lot of money on gold. If you can make every single day 100 pips on gold, that means, I mean, take your 100 pips and be and get out of the market if you wanna. Now really, obviously it's not gonna happen every day because the market conditions is not the same every day. But Yeah, that is just also something I just wanted to mention when it comes to take profit and managing your trade. Okay, so that was Monday's trade. We took a sell on Monday. Sorry, oops. Um, Now I need to delete first these lines. Um, and now I want to move. Like, let's just do this first. Monday and then Tuesday. Yeah, this was Tuesday. I just want to delete these lines so that you can only see my key areas. Um, okay, so remember what I said. We are still overall bullies, so we're not gonna go for the. If we sell, we're not selling for like we're not looking to sell to all the way to 4,000 price level all the way down here. However, we always react to what the market shows us. Now, on Tuesday, when I came to the market, I noticed the market price went all the way up to my key level. Can you see how it respected my key level? It came, remember, this was the Monday. This was our Monday trade. Yeah. And then price shot all the way up. And we when we came to the market, price was at 4,380, busy rejecting and bouncing against this resistance. We can say that's also a resistance because if you look at what previous price point here is 4380, sorry, 4380, and let me just bring it a bit up. This was 4 o'clock, 6 o'clock. Let me just go a little bit forward. Okay, sorry, that is too much. Anyhow, so on the 1 hour, this is a 1 hour time frame. Um, yeah, this is the 1 hour time frame. Now, first things first, we wait for a break in structure. Now, sometimes it happens earlier than like the candle did not close properly yet, but you can already start reading price action. Now you see this low, there was a low broken, that's a low, so there was a low broken, this low, price is lower than these previous lows as well, but now we are currently sitting at this low here, so price is here. We came to the market and we start seeing that price gives us this beautiful bearish candle. Remember what how quick this trade happens at 7 o'clock? Because when I came to the market and I told you guys, I can see that the market is bearish. The direction is bearish. It was based on what I see happening at the resistance level on the 1 hour, right? And also what I can see that price tapped into the supply, an overall supply, and we might just see a correction all the way down to this low of on the 1 hour, and thus for to remember I still said I can see price going to 4 to 70. So 4 to 70 was around here, and then so the entry was based on the break of this is a break in structure candle. Why? Because the bearish candle broke these lows here, and it also took out these wicks. You must always pay attention to wicks. If you see a candle like this, candles make this wicks, and you see another bearish candle, a full body candle, close below those, that is a strong indication of like a bearish momentum. And remember, we as traders, we want to trade in the direction where the strong momentum goes. So we're looking at when you see that bearish candle close below a previous week where there was a lot of wicks, because wicks, remember what a wick in a candle is. A wick is an indication of indecision. So that means that there's not a lot of momentum. It's not giving us indication of momentum. But once you see a strong bearish candle after, remember it must be after the weeks, you must know that that is a strong indication of price going to go in that direction of where that candle closed. So based on that, based on what you know now, and based on what I know, I had my supply zone around here. So now, like I normally say in the group, guys, we're gonna wait for the pullback, and I sent my entry, I sent you a stop loss, I sent you a take profit one, and then a take profit two. I will answer all the questions later. I see there's questions. I will answer it. I'm just after this. Um, so on Tuesday, I just want to just make sure. Da. Sorry, let me just check here. I want to make sure about the entry 4326. Okay, 434. Okay, so I think this was the entry where we said 4340. So my initial 4340 is 4340 is around here, right? So that I was gonna enter right here on. I was waiting for price to give us a pullback, and our stop loss was at 4344.5. So just check where the stop loss I gave was at 4344.5 because of this week's here. So the stop loss is just above this high, the last high, and then our entry was going to be at where I just made this line here. Let me just make it blue so we can just, or red. Okay. So this red line was going to be my entry, but I want to show you what price did. So as I was waiting for price now price already dropped this strong. Check it. We're waiting for price to come back. And this is what happened. Price started to push, give us another strong break, gave us a pullback, but then decided to continue down and just check here. So my first entry, when I started to see price, okay, price drop, came back, dropped again, then gave us I had an entry around here as well. So obviously, and I think Ibrahim, you asked me for what is the new stop loss. It's because, and that is good because now we did not enter here. If you entered here one position, obviously your stop loss can't be there. So now I want to, if you are in the situation again, because it can happen again, it's just based on structure, so it will happen again. So say for instance this happen and you entered here. Let me just take this away before this happened, right? Now you are here, you entered with on this pullback. So price started to move, um, and you entered now here. So now you bring your stop loss. You see this loss high here. Your stop loss needs now to be at least above this high. Because if it happens that price come back, you can always just close and re-enter if you start seeing a rejection if it comes back into your zone. But obviously you now need to be comfortable with your zone, and you need to be comfortable with knowing where to put your stop loss based on structure. Now, when I say based on structure, I mean this. So there's a low, and there's a lower low, and there's a a lower, higher, lower high, sorry, and a lower low, and a lower high, and a lower low. So if you entered now here, all right, then your stop loss needs to be above this previous high. If you are in a sell, if you are gonna sell, same happen for the buy. If you're gonna buy, your stop loss is gonna be below the previous low. All right. So that's also how you manage your trade when you are maybe in a winning trade and you want to trail your stops. So just check what happened. So price came back there and check what it did. It did break up a little bit above the zone. So I would say it would not have been, it wasn't a good entry, but if you could not hold the straight open, then it by all means close when it break above there and wait for it to come out of your zone again, because now you have strong confirmation when it came out of your zone, and bring your stop loss just above that wick. You see where this entry was going to be, bring your stop loss closer to this wick above, and then let's see what happened. And then you can re-enter here, because based on, if you check on a 5 minute, it looks a bit, that's why I don't manage my trades on 5 minute. This is the 5 minute, but it looks a lot busier on the 5 minute than on the 15 minute, because on the 15 minute it's clearly shows us the strong, look at this strong pullback. And once we see a strong 15-minute candle like that close, obviously look at all this money up there. Just because sometimes this is what gold will do, it will come to your uh, um, come back to the entry. However, this is in alignment with structure. So you would say, but why don't you put your stop loss all the way up there? Obviously, you can do that. It's because above that, it is actually the proper stop loss. Remember, I wanted to enter in the beginning here. This was my initial entry gonna be, but I just explained to you what will happen in the scenario when price will break out. You maybe entered a bit early, like I did on Tuesday. I'm still in profit. My account maybe can handle, but because I can also understand that this is a supply zone, and if price is the rejecting of the supply zone, it's still going to drop, because overall we can see that on the 1 hour. Look at what price did, guys. We can. This was how TP that I knew that price was gonna come to 4270, and look at how price break this previous low, and then this is the last high that it broke out. That's a demand zone also, and see what happened. So on Tuesday, it was not a straightforward entry, and this will sometimes happen. However, to protect your capital is your first priority in trading. So if you entered a bit early, because you will make those mistakes, even I still make these mistakes, even though I'm a profitable trader, I still make a mistake sometimes to enter a bit early. But remember, I know exactly where I'm supposed to enter. So if I start seeing, the only time when this trade would have been invalid, if price was breaking above this highs and then continue. If price was closing above here, above 4345, then I would have known that this trade was going to be invalid. It will never play out. But because I trust the fact that structure was coming back, even though that pullback was devious, because gold was playing with us. Because remember, it broke out right here, gave us that small little pullback. We wanted the price to come back into our zone before we enter, but it started giving us this pullback, and it started to also drop strong. Yeah. And then obviously later on, it pulled back to the entry, and then it started to drop like super hard. So this was on Tuesday. Yeah. What else did I wanted to mention? There was nothing else. All right, so Wednesday, where was I now? Tuesday, and now Wednesday. Sorry, I just need to. Oh yeah, okay. Let's look at Wednesday's trade. I hope this helps someone. I really hope that does add value to, and you maybe you saw the trades we took, and just something is clicking for you, and you starting to see things a bit little bit, even if it's just one thing. So okay, let's start over. Wednesday, Tuesday, sorry, yeah. Now I used to like trading the London Open. Right now, the London Open for us is around 9 a.m. However, because of this gold rush that we are in currently, and with the war between China and America, actually, with Trump always giving putting like sanctions and tariffs on China, we know that China is the biggest buyer of gold. So the Chinese are actually, they are moving the gold market because they are buying gold, and we know if there's a lot of buyers in the market, it pushes the price the of gold up, because obviously the demand and supply is moving the market. So we know that we were in a strong bullish trend. Like, we've seen gold reach all-time highs. 438 is the highest that gold in, like, since 2011, they said. Like, this is the highest the gold price was in history. I thought price was gonna go to 450, and then I also had a key level at 5,000. I think I took it off, but I do still think that the gold price will go to 5,000. Maybe next year. We don't know when, but it will go there. It is heading there. However, as day traders, we are so blessed because we can trade, we can sell also in a bullish market. We can capitalize on the pullbacks also if we know where to enter. So, when we came to the market on Wednesday, check here. So, it does look really like, okay, but what is this? This looks then like a very trend. However, I don't know if you guys know, but for a trend to be a trend, it needs to at least have three touches on a trend line. It has to at least make three lower highs. So we can't say this is a bearish trend. However, we can say that price is showing a strong bearish momentum, because it's now starting to break lows. It's starting to break these lows. So when I came to the market, it looked very. Let me just delete this so it won't confuse you guys. So this is previous markup from other charts. Um, okay, so this is, look at this week here now. So I actually went to the 4 hour to check what happened here with this week, and I I saw this high, previous high, and I was like, okay, so this week basically tapped into this previous demand, because this is a strong area where price broke out previously, and price dropped all the way and then rejected off. And then what is our next low? Our previous low is these areas here, and it is at my key area as well, where you can see I marked it off as for 188. So then I looked at that and I start seeing, okay, on the 1 hour, we can also see that, paying attention to the candlestick patterns, I can see this is a evening, not an evening star. This is, look at this. Okay, so based on this pattern here, I was waiting for price to give us a break above this, because this is a small form of a resistance, right? So when we came to the market, this is what it looked like. And then this candle was the break of structure candle, right? So there's a few criteria that I look at, or a few confirmations for the entry criteria is, it has to, there must be a breaking structure, and there must be a solid breaking structure, not just a breaking structure. So sorry. And then just check how price was rejecting off after this break in structure. Right? You see this beautiful bullish candle? However, guys, check on the 1 hour. The 1 hour candle has not broken this previous high. It's still at this high. We cannot say that this 1 hour candle broke structure, and this candle closed at 6. So this candle, next candle, this doji was the 7 a.m. candle, and that was the time when I came to the market. That's why I told you guys, let's wait first. Because I can see price is starting to form, and it is very important to have patience. You want to wait for your confirmation. You want to wait for that confluences before you enter. So, and I know some people will be impatient and they will buy and sell. I'm not doing that. I'm waiting. So on this at the 7 o'clock, look at that. That candle actually gave me um 4132. Yeah, for 140. And I said to you guys, a more conservative entry would be at 4141. This is the 4141. But I was talking about, if you now know the strategy that I trade and the entry was based, you see this candle? So this zone here is based on that candle. You see where this candle, this is actually a low here. A candle with market structure this low, hence my zone was drawn based on this full week of this candle. Look at the week of this candle, sorry, this week here, right? That week is a strong rejection because of after it broke out, pulled back. Let's just show you. So after price broke out, let me just take that away. Check what price does. This is a low and it just touched the low, and that's why it's important to wait so that price can first do the pullback, give us the rejection, and now we're starting to enter. So when it started to enter, remember I said I'm gonna enter as soon as that breakout now. And my first TP was gonna be at 4165, I think, if I'm not mistaken. But then I changed the TP to 4156, right? But 4156 from here, 41432, sorry, that was our entry. 41, am I right now? 4152, first I said 4152, but then I sent you a new tip and I said 4156, right? So 4156 is around here, and that is 240 pips if you entered at 4133 or 4132. However, I also said 4141 will be also a conservative entry. So it's better for you to wait. And then my stop loss was at like 4122. Okay, so my stop loss was here at 4122 based on, can you see based on what? This body of these two candles. You wanna, if you entered here, you're starting to see the strong bullish, and then look how price played around with us on Wednesday. You see, stopped out and then it continued up. So if you were stopped out with your tight stop loss there, check what price it just stopped us out on this week, and then you enter at 4132. If you waited for that break here at 4132, if you entered early here, that would have been a stop. If you entered here after this, your stop loss 4160 new TP, that is 1:2 risk reward, and this is a 4122 is your stop loss. Bring it closer to this body of this two candles here, just below this body here. And then price came down. Just check here this pullback. Price came down and then hit 4160 at 267 pips. So even though the TP2, this was that trade that came back all the way. So you would see now if you were in profits here and this start happening, right? This used you are up in profits, take some profits, but then leave if you were left a runner. Now you move your stop loss. You move your stop loss to your break even so you can have a risk free trade. You must, as a trader, you must do that to protect your capital. You mustn't wait for me. You mustn't I cannot manage your risk for you because I don't know how much money you guys are trading, and I also don't understand your risk tolerance. Everyone's risk tolerance is different. So I was still in this trade and I actually moved my stop loss to below this week here, and this trade came all the way down. So that one position, as you can see here, it came down. I was not stopped out here, but I was stopped out on the second candle here. So just check how it came back to this supplies demand zone, and then it tried to move up again, like only like 150 pips from here to there on this week, and then it started to drop all the way down. So this was one of those trades where price just reversed prices with no, like, how can I say, like, just sometimes these are things that happen, but it's happened in the past so many times with me, and that's why I now know how to manage these type of trades. Where I was up like 260 pips, 270 pips on gold, and then it will pull back. So always take some money. Don't always want to go for the big moves, guys. I used to trade GBP USD, and on GBP USD in a day, you would get on a trade setup like 10 to 15 pips, and that is you won't, then you need to use a high lot size to make a good amount of money that is actually meaningful money. But on gold, if you make 100, and that's what I always preach, and I think the students or the mentees that does well with my strategy is the people who I taught, and who's actually applying this. They always take profits out. If you are, I always speak about this because we're not just trading to make for an analysis, we're trading to make money. So at the end of the day, if you have a small account, you must take some money out. You must try to build that capital. So if you are up 50, 60, 70, 80 pips on gold, I know it's difficult when you have small account and you see the small amounts because social media, people show big profits. But you have a small account, that's your reality for now. So you need to take profit because you're gonna think you're not a good trader, and this was 270 pips, you were up in profits and you didn't take it. It happened to the best of us. Like, that's why I preach take some profits. And believe me, there's days when I also don't take profits, or I did not set my TP in time, and the market comes back. So I know the reality of it. And it's not nice if you've been up and now price come back to your entry again and you didn't take anything off. At least take something. So this is basically my strategy that I use on gold. Um, and I'm not a swing trader, so I don't really hold trades overnight. But this strategy is a strategy that you can use. It's an entry strategy, so you can use it on any instrument, and you can also do you can trade a like swing trade on it if you have that type of capital to handle the drawdowns. Obviously, you will see here where I base my stop loss off, so that my stop loss is pre-calculated so that I don't lose more than what I make. At least at the end of the day, we want to make more than what we lose. We will have losing days. We will have losing trades. We will have a wrong entry. So you will have to just use then. For instance, if you have a small account, you can't use bigger lot size, things like that. Proper risk management. Use 0.01, 0.02 if you have like small, like 200, $300. Obviously, if you have more capital to play with, you can use 0.10, 0.15, but always protect your capital. That should be your goal. And when you make money on gold, like I always try not to make to make more than one, take more than one trade on gold, because the London session versus New York session is different. Sometimes it trends bullish, strong bullish in the London session, and then in the New York session it gives a reversal. So I don't trade both sessions. I focus on London session, and I try to capitalize and get a move in that session. Sometimes the market gives us a session later in the day, and then you have to adjust yourself. But I don't like to be in the market when there's little momentum, because like you can see my trades play out. Say here 7 o'clock candle came back. This trade to the TP1 played out at 8:30. So that was like an hour and a half you spend on the charts or managing the trade. Obviously, I have also other responsibilities. So I don't really like to sit on the market for a whole day. I don't really watch the market the whole day, but I like to make my money in the morning, take my profit, and then come back tomorrow. Like follow that same process, because it's all about consistency. So now it's not for me. Like you will see, my targets is also based. The approach to the market that I have is not based on um making the most money in a day. But I can tell you, I've seen people make thousands with my strategy. I've seen people take my setups and making thousands, um with obviously with bigger capital. But I also accommodate those with smaller capital to use proper risk management and grow your account from these setups with the strategy. So that was on Wednesday. So I don't trade Fridays. I don't trade on Fridays, but I sent my trade out on Thursday. Was the last trade we took. I didn't actually take a trade. Did I take a trade on Thursday? Yeah, Thursday's trade was a loss. Thursday's trade was a loss. So let's just go through it and talk about it. We learn more from losses than we learn from wins. So let's talk about this trade. Why did we lose? Okay, so my first entry, okay. So this is where, let me just delete this first. Now, guys, this was Thursday. If you check here at the bottom, sorry, I'm on the 4 hour time frame. Thursday, 5 o'clock, 6 o'clock, 7 o'clock. Now, we started. We can see prices actually in a small like a consolidation here, right? There's no break yet. There's no break to the upside, and there's no break to the downside either, that can give us an indication of what is it that price actually wants to do. So if I zoom in like that, I came to the market, and that was 7 o'clock, around 7. Was that around 7? And I said to you, the overall direction looks bearish now, as you can see. And why is that? Because like I said, there must be the three lower highs. So here's a lower high here, here's a lower high, and then we start seeing another lower high. So now we can confirm that price is actually trending downwards, right? So you don't want to really be in a buy when when price is trending downwards, you want to be in the direction where price is trending in. So, and you always want to check that on your 1 hour and your 4 hour time frames, because those time frames have more solid information than the smaller time frames. I don't trade on 1 minute. I trade on the 1 hour and analyze, and on the 15 minute I draw my zone, and on the 5 minute I will just peek at the 5 minute, just to see like a better entry, a good place to enter. So let's start with the analysis. Now, this was my initial. I saw this. I think I sent the picture that I sent you guys. Yeah, it was around. I think it was this one. Huh? So Now you notice this Paris candle here. This is on a 15-minute now. And I was gonna target all the liquidity here at the bottom. Now, what price already did here when we came to the market? Price already broke out and it is now currently in a supply. Now, how do you trade it from when price already came back? It already broke and then it's now currently trending at a supply zone. This is a supply zone. As you can see, it's rejecting off right in the supply zone. So I was definitely, this was my last candle that I was looking at. So on the 15-minute, I told you guys, we're gonna wait. We're gonna wait for price to give us to tap in here again and then show us any sign that it wants to drop. And then does happen, right? So what I initially wanted, I wanted to enter at 4109. What is it? 4109. No, I'm lying. Why? Oh, sorry, man. I drew my finger wrong. Sorry, sorry. I'm so sorry. It's supposed to be on this week and not this week here. So let's go back. Let's go back. I'm just trying to see what is it. So on the 15-minute, the zone was here. Okay, yeah. I said it has. I'm waiting for it to tap in there so that we can get an entry because the entry I sent in the group was at 4109. 109 is here. Okay. 4109, 4093, 409. Okay, so let's just check again. Okay, so this is basically what happened before it go all the way up. So now this is a supply zone, and this is a good example of when to not take a trade. This is because it's no use. I show you, I teach you the strategy when it will play out, but I don't show you or teach you the strategy of what to do at the entry when those criteria are not presenting itself. Like I said, I identified that this is the zone here, this full zone is my supply zone. So based on that, I drew my supply zone go all the way to that. And then we remember when we came to the market, it was around 7, it was around here. So I was looking for price to come and give us a tap, first pull back, and I said, let it play out. We're gonna be patient. Give us a tap, and then when there's a rejection candle like this one here, then we're going to then enter. So this is what happened. Price did give us a pullback, and then I thought that price was gonna reject, and then price started to just start breaking highs here. As you can see, it started breaking this high. So immediately this zone now becomes invalid. We remove that zone because obviously it has broken a high. And if we go back on this, however, I still had a bearish bias for this. So remember what I said then. Don't know if you guys remember. This then started to price then started to drop like this, and I actually gave the entry as soon as price break here. I was gonna enter, and I did enter actually, and then my stop loss got hit 3-1. I thought price was gonna go all the way down to 4090. Why so close? That was 109 pops. 409, 4109 was my entry. And then your stop loss there, 4090. So thus I send out later like at 10. But then again, this already happened. and you can see what happened here. So if you entered the right year when price broke out, obviously you would have made money. But Thursday was not really my trade setup. The setup was so messy, and then if you actually look at this year, based the reason why I entered here is we can see a strong push down and then a pullback, and we see these wicks rejecting off these wicks, and then it started to break, and then I can see it wants to come and retest this low here. So if you entered here and your stop loss was like there and you kept open, look at what happened. And price came back and hit stop loss. Basically did this for a 2 hours, was consolidating in here. So it was not really moving like it normally does. And then in the London session, you can, sorry, London session, New York session, 4:30, you can see here at the bottom, price started to break highs. So obviously we were bearish in the New London session, and then price started to reverse. So that's why I don't really keep trades open from London to New York. Yeah, so this trade was definitely, and then I said to you guys also, look at this um, momentum is dying down. I can definitely, when I start seeing this type of consolidation, I don't want to be in the market because then gold just start to like wick us out, and it starts to act weird. We want to be in the market when it's trending like that. So yeah, that was Thursday. But overall, if you took those Monday, Tuesday, Wednesday trades and you had 3 wins and you had maybe your stop loss got hit on Thursday, you still should be up in profits because our risk reward ratios is we always our target is 3 times higher than our stop loss areas. The only time when you're losing and you're not profitable for the week is because you might have taken trades out of session or you took trades that is in the wrong direction, or you took multiple trades and you just manage your risk poorly. So yeah, this is basically it for tonight, guys. It's 8 o'clock. I thought it's gonna only be an hour. So yeah, if you have any questions in the group, send me a message. When I have time, I will respond. Looking forward to next week. Um, to take more good setups. It's I don't see any news coming out. Also, I do check in the sorry, I do check for news every morning where the high impact news comes out. Like you will see in the first week, I think when CPI news comes out, FOMC, NFP. I don't trade those times. But yeah, thank you for tuning in tonight. And yeah, I'm looking forward to next week to make some money again. And it's all about managing your risk so we can stay in the game for longer. Remember, I always said that like your capital, your first goal is to preserve your capital preservation. It's not about hitting the big targets. If you make money, take your money. It's just another day in the market. Next, we must come back tomorrow. We must come back again the next day and the next day and the next day. When we take a loss, we we are done for the day. You have reached your maximum loss or whatever. You come back the next day, and like I always say, the hard part of trading is not the analysis, is not knowing when to enter and exit. That is actually the easiest part. Even though for me, managing a trade for others and all that, it can be tricky. But if you have your strategy, this is not the hard part. The hard part is I've made money, but I want to trade again. I have this urge to overtrade. I have this urge to enter. Then you give your money back to the market. The hard part is on a losing day or on a day when the market is just don't want to move. You are impatient. You don't want to wait. The waiting for that perfect opportunity. That is the hard part of trading. The hard part of trading is also being disciplined with your journey. I remember when I only had like 500 rand to trade with, and I know I have the skill, but I can only like you only have 1,000 rand to trade with, and now you're only making 20 rand, 30 rand, 50 rand. It does play with your psychology because you think you must make those big money. You want to make the big money, and it's not like it takes time. It does. You have to go through the process, building that psychology and building. Um, yeah, Muhammad. I don't know you, Muhammad Shosha. But yeah, thank you guys for tuning in. I'm gonna end this live now. Can I have the WhatsApp group? Is there a link? Thank you. Wayne Abrams. You can if you have me on TikTok, inbox me. Or I'll just send it to you. I don't know if I'll be able to send it on this live. But if you have me on TikTok, you can just send me an inbox and I'll send it to you. Um, yeah, and if you're new to my channel, subscribe to the channel and like this live as well, please. If you got any value out, thank you guys and ladies. I'll see you next week. On Monday, I will be back sending the trades on gold, and yeah, then we talk about it. Please do subscribe to the channel if you are new to the channel. Um, Good evening and have a good and a great weekend, guys, and goals. Okay, I see some people did subscribe. It's good. Okay, thank you for liking the broadcast. I'm going to switch off now. Have a good evening, guys.